Over 1 million people around the world follow Wall Street veteran Marc Chaikin for his shockingly accurate stock market predictions, and he just gave them a dire warning. Marc says we're about to witness a historic stock market shakeup that could soon create devastating losses for investors who don't know what's coming. And as a result, you only have 90 days to move your money. You see, Marc spent 50 years on Wall Street at some of the most prestigious hedge funds in history, and he's been on Fox Business and CNBC countless times. But this is a financial story no one else is telling. And if you let this take you by surprise, you could be in for a world of pain. He explains everything in a brand new free report available at rollingcrash.com. He includes the name and ticker of a popular stock that could be directly impacted by what's happening as well. Marc warned of beloved pet brand Chewy before it fell 45%, tech company Sea Limited before it fell 66%, furniture company Wayfair before it fell 76%, social media favorite Snap before it fell 36%, and food delivery company DoorDash before it fell 65%. Marc even called the Amazon crash before the famous FANG stock fell 35%. So you'll want to avoid the stock in his new report immediately. Again, simply go to rollingcrash.com for your free copy of this new report. Hi, this is Daniela Cambone, and welcome back to the Daniela Cambone Show here on Stansberry Research. We are continuing with our summer series with our all-time favorite guests, and joining me today is Dr. Marc Faber, obviously a world-renowned economist and the founder of the Gloom, Boom, and Doom report. Dr. Faber, it's always nice being with you. Welcome back to the show.
Well, thank you very much for having me.
So I rounded up a few headlines out there right now that I wanted to get your specific take on. Let's start with this one. The U.S. won't climb out of its $32 trillion debt. Talk about stating the obvious. But David Rubenstein, co-founder of the Carlyle Group, said it's best to lean on inflation. He says we aren't going to cut expenses in the government. We aren't going to increase taxes that much. We aren't going to go to a bailout with the IMF. That's not realistic, and we're not going to default. The only alternative is to inflate your way out. I mean, he's stating the obvious, right?
In my view, yes. I think for the U.S., they could, of course, reduce spending, and they could increase taxation. But the way the political system in Western democracies is set up is that whenever taxes go up, they go up on poor people and the middle class and the upper middle class. But the super rich, they always find ways to avoid taxation through all kinds of foundations and benefits and so forth and so on. So at the end, tax increases have a very negative impact on the economy because it hits the people that consume the most, in other words, the middle class and the lower classes. And so it's unfair. Spending cuts would be desirable, especially in the case of the US and of European countries, where transfer payments are huge. You understand? A country that has expenditures, it could spend money on infrastructure and productivity improving capital spending. But to take money out of the pocket of someone through fiscal deficits and transfer it to someone else is of no use, macroeconomically speaking. And the deficits, that I need to point out, is a tax, a fiscal deficit, and which then leads to inflation, inevitably is a tax on the system. And in my view, this gentleman, Mr. Blumenthal, he's absolutely right. The US will have to inflate also because of the unfunded liabilities. And therefore, my view is that although the inflation figures may look better for the next few months, in the long run, I think the inflation figures and interest rates will exceed the peak we had in 1980-81, when the 10 years Treasury was yielding more than 15%. It peaked out at 15.84% on September 21st, 1981. I think we're going to exceed that.
Why, Dr. Faber? What would be the catalyst for that?
The catalyst has begun already for a long time. Fiscal deficits under Clinton and the booming stock market of the late 1990s, there was for a brief period of time, for 3 years, there were fiscal surpluses. Since then, it's all red ink. And as a result of that, the government debt goes up, and more money printing is necessary to finance this mess.
Help us decipher this then. If the Fed almost needs the inflation to fight the debt, when they tell us that they're still not happy with what they're seeing in the CPI and they're going to continue fighting it, do they really want to fight it?
The Fed, like other government agencies and like other politicians and government officials, they are all lying. Lying. They never tell the truth. They tell the public what the public needs to hear, and their interest is, of course, to maintain the financial market at the high level. They don't want deflation in financial assets, and if they could, they would also prevent deflation in real assets like properties. But this is difficult to control. But basically, they can't afford the stock market to drop 50%, so they will print money.
What are they trying to avoid by lying? Public panic?
I think if the ordinary man realized that the rate of inflation is a tax on them, because as you know, in the U.S. for the last 2-3 years, real incomes of the typical household, I'm not talking the real incomes of Bill Gates and Warren Buffett, but
real people,
of ordinary people, in real terms, in other words, inflation adjusted, has gone down. In other words, the Fed and the government statistics report that GDP is going up, but my figures suggest that the standard of living of the typical household in the US and in Europe is going down.
Well, speaking about Europe, let's go there for a second, because the other news headline I wanted to address with you is the ECB will now ask banks to provide weekly liquidity data from September so that it can carry out more frequent checks on their ability to ward off potential shocks as interest rates rise. This is according to the ECB supervisory chief. In an interview published by Milano Finanza, Andrea Enrea said that European banks were stronger than before, but that financial markets were still in a delicate phase due to the Ukrainian war, higher inflation, and fast rising interest rates. How in danger or not are banks in Europe now?
Well, the Ukrainian war has basically nothing at all to do with the rise in interest rates and the rise in inflation in Europe. But the rise in inflation and interest rates in Europe has everything to do with irresponsible monetary policies of the ECB, the European Central Bank, which printed as a percent of the balance sheet even more money than the United States Fed. And that has led to a problem because interest rates were kept not only artificially low like in the US, but they were kept negative. In other words, at negative interest rates. Has never happened before in history. For that, we needed some academics and politicians to run the ECB. Give me one example in history, in the 5,000 years of recorded history, where interest rates were negative. Not one. But as soon as we have these academics at central banks mixed with politicians that want to essentially paint a picture that is much nicer than the reality, because they can't afford to tell the truth to ordinary citizens.
Let me ask you this, because we didn't speak, we spoke before the bank run. What were your thoughts on what was happening in the U.S.? And do you think consolidation in the banking space, as Yellen had pointed out, more to come, is healthy? I mean, are there just too many banks in the U.S.?
I don't know whether there are too many banks in the U.S. In my view, competition is healthy. In my view, the capitalistic system is the only system that guarantees freedom, but it also entails responsibility, and it entails wealth inequality and failure. You can only function in a capitalistic system and in a free market if you allow market participants to go bust. If you bail out everyone, you will end up with some sort of a fascist system or kind of a crony capitalistic system, which is happening in the Western world, unfortunately. So the question whether we have too many banks in the US, I can't answer it. In Switzerland, we had two large banks,
right,
and one has now failed. So we have just one bank. And of course, this bank is now like a government bank. It's a private sector bank, but in character, due to its size and its social responsibility, it's like a government bank.
Let's talk the US dollar now, Dr. Faber. I'm interested to get your thoughts on this news item that's circulating. The BRICS are preparing a gold-backed currency. Do you take their word for it? Do you believe it? And how much of a threat could it really be?
It's a philosophical question. What is a threat in life, and what is a challenge, and what is desirable? In my view, it is desirable for the world to have many participants in global economic affairs and in global politics. In other words, I think the system should not be a system where you have a kind of a currency, a global currency, like the dollar was, or before the British pound, or the Spanish peseta, and so forth. I think the best is that we have many different currencies and that people trade freely with each other. In other words, when China trades with Saudi Arabia, or China trades with Brazil, or China trades with Russia, there's no need the transaction should occur in US dollars. It should occur either in Saudi Real or in Chinese yuan or RMBs. In other words, I think the best for the world is that the dollar system that prevailed is gradually phased out, and this is going to happen because the balance of economic power, which was strongly in the hands of the United States in the 1950s and 60s, since the 70s, and especially after the 1990s when China really began to open up, this balance of economic power has shifted into emerging economies. China is a much larger industrial producer than the US today. In 1970, China only consumed 2% of global industrial commodities. Today it's close to 50%. China produces more cement than the rest of the world combined. There's a big country. And another big country is coming up, India. It's now a larger economy than Britain, who were the colonial master of the Indians for years. It's a new world. But the American politicians, they can't accept the fact that the U.S. is no longer the number one economic power in the world. It is still an important power, but it's not the number one power any longer. There are many number one powers, including China in some industries, India in other industries, Brazil in other industries, and.
So, Dr. Faber, what do you make of proposals such as those of Robert F. Kennedy Jr.'s idea to back the U.S. dollar with gold and Bitcoin if elected?
Well, I'm in favor of gold and precious metals, and I'm in favor of a stable currency. I think money is far too important to leave it into the hands of some academics who've never worked in their life. They went to universities and write all kinds of paper that are entirely useless at taxpayers' expenses and so forth. But they shouldn't be in charge of essentially the budget of a country. So I'm in favor, of course, of a gold standard, but I don't think it will happen. Now, I think what investors should consider is that at the present time, the US is approximately or more than 50% of global stock market capitalization. And the US dollar is the unit of account globally. Most trade still happens in US dollars. I think over time this will change, and that investors should move money out of US dollars, but not only move out of US dollars and hold the funds in the US, they should actually invest in other countries, in stocks, bonds, commodities, and real estate. It's a process that is not so easy, because they have to travel to these countries maybe physically and look at the investment opportunities and so forth. But I think it's a big risk to hold all your assets in US dollars, because I think that the US dollar will become, over time, not tomorrow, but over time, a worthless currency. It doesn't mean that the stock market will go down. As the dollar goes down, essentially, when the dollar weakens, it's a symptom of excessive monetary ease, of inflation in the system. And under these conditions, real estate and stocks tend to go up, and of course, foreign exchange rates and precious metals. So my view is that as inflation will reaccelerate in future, that investors should have money outside of the US dollar region, and that includes the close allies and vassal states or provinces of the US that are Canada, Australia, and the United Kingdom, and New Zealand. The woke countries are all in the American empire.
If you're out of the so-called American empire, where are you invested?
Well, I lived in Asia since 1973, in other words, 50 years. So I may be biased towards Asia. Now, recently, there have been some discussions in Bahrain at the round table. I was surprised of the 10 panelists. Not one mentioned oil. Not one. Not one mentioned Chinese stocks. One mentioned Brazilian stocks. And I agree. I think that in a world, I have educated friends who believe World War III has begun already. I'm more optimistic because I'm an optimist by nature. And so I think that we can avoid World War III, but it may break out when someone who is crazy at the State Department among the neocons or a hardliner in Russia or in China pulls the trigger and pushes a button. So in that scenario of World War III, I think the safest region in the world is Central and Latin America, because the war, when it breaks out, will be somewhere fought between China and the US, Russia, the US, Russia, Europe, China, Europe, whatnot. But it's unlikely to touch Latin America, Brazil, Argentina, Peru, and Colombia very much.
Just to wrap this fascinating conversation on the US dollar, the pushback we hear is, well, Dr. Faber, we've been hearing about the end of the US dollar since 1963, and it just never happens because the US remains almighty. Now, given it is a new world, as you say, and given that China is a very different landscape than it was in the 1960s, what is the main reason, what is the change now that would see the death of the dollar? The main change?
Well, I tell you, I mean, first of all, if you have a global currency like the US dollar was, a reserve currency, a lot of it depends on confidence and on prestige. If you travel internationally, the US may be better liked than the Chinese and the Russians, but the prestige of the US has diminished a lot. I mean, I see it here in Thailand. They had recently elections, and a candidate who had been educated in England and at Harvard, he won the most votes. He's an okay guy. I mean, he's from a good family and so forth and so on. But what disturbed everybody is that the rumor came up that he had been financed by the US. Because you understand, Thailand is between the Western countries and China. In the north, we have China. In the west, in the south, deep south, we have Australia. And basically, the China and the US are fighting for influence in Vietnam and in Cambodia and in Laos and in Thailand. In Laos, the Chinese are criticized because they built the railroad. Well, what do you think is better, to build a railroad or to carpet bomb the country? So it's normal that the Laotians, that are among the poorest and the least developed nations in the world, they accept the Chinese investments with open hearts. And they're still collecting the bombs that the US dropped on the country. Carpet bomb!
What kind of gladiator type games do you think will unfold during this presidential election? Between DeSantis, Trump, obviously RFK, Biden. What are you expecting?
I don't know, but as an observer, I have to say it's a sad sign that essentially the most established democracy, because I have to say one thing, the US Constitution is a very valuable document. Of course, it wasn't meant in the Constitution that everybody could vote. It was only meant that educated people could vote, or rich people, or property owners, not that everyone could vote, and certainly not the colored people. But I have to say that in essentially a model democracy, in a modern country, still modern country, where so many bright people exist and study and start businesses and so forth, the two leading candidates are Mr. Trump and Mr. Biden. This must be a complete indictment of the system of democracy. I have serious doubts about democracies anyway. There is a system that will die out and will have totalitarian rule again, either through family traditions, in other words, an aristocracy or royalty, or a money royalty, or an elite, whatever it is. Democracy is doomed to fail.
You know, right now the popularity vote is in RFK's favor ahead of Trump and Biden. I mean, it's really too soon to tell, but do you not think he has a shot?
I doubt. That I doubt. I would vote for Ron DeSantis. I like this character. Of course, he's also a politician and interferes into many things, which he shouldn't. But at least the state of Florida is reasonably well managed compared to, say, California. You look at the disaster of New York.
Or New York.
Or Baltimore. Or Chicago. That they had in Chicago this Mayor Lightfoot. I always thought it couldn't get worse. But it got worse. The new mayor is even a communist.
Oh, Dr. Faber, I love speaking with you. Let's wrap on this note. I always ask, is there anything that keeps you up at night? Is there a wild card for you?
Well, what keeps me up at night is a good beer. This is a Thai beer, Beer Chang. You can buy the stock Thai beverage. And whiskey and a cigarette. But otherwise, I sleep relatively well. And at night, I work. So I don't sleep at night. I sleep during the day. But what worries me, of course, is, you see, I have assets. I have real estate, and I have stocks and bonds, and precious metals, and so forth. I'm always concerned when the system breaks down that you may not have access to your money, that it's taken away by, the system. I mean, if the government of incompetent bureaucrats, that I have to stress, that I agree with Kennedy, if these people could lock up a population and punish people for not taking a vaccine which was unproven, then they can also take your money away anytime. They can imprison you and so forth and so on. So these are concerned. I live for this reason also in a country which is not extremely well organized. So you can slip under the radar. I think people, before they go on social media and broadcast all their achievements, they should think twice about it. I have friends who are ultra rich in the billionaire class. They completely disappear from the scene. Completely. They moved out of the U.S., and nobody knows who they are. Nobody knows where they are. I know sometimes because we correspond, but it's a confidential thing. And this is the way to protect yourself. And I think that people are now obsessed with making money. They should be obsessed with how not to lose it in future. And that's why I suggest that people invest in jurisdictions outside of the US dollar bloc as a diversification. I mean, I have no sympathy for the Chinese government and so forth, but at the present time, as an example, Hong Kong stocks are very inexpensive. Also Chinese stocks, not all, but some are inexpensive. And as I said, in Latin America, you can find very inexpensive stocks. And I find commodities to be, again, inexpensive. So there are always opportunities. But I would avoid having all my money in the U.S.
One last point, when you were speaking about your fears, like, of course, was thinking central bank digital currencies in my mind. Is that one point you were alluding to?
Well, I think the cryptocurrencies is an interesting phenomenon that arose because of excessive money printing by the Fed. And don't ever think that it was created by a poor fool in Australia called Satoshi. This is organized. I am sure the founders of Bitcoins are the same that founded the Federal Reserve in 1913. It's a new gimmick. But the Bitcoin is now an established type of a currency, and I would not encourage people not to hold it, and I don't encourage them to hold it. I prefer precious metals, but if I talk to someone who is 25 years old, he thinks I'm a relic, that I'm a dinosaur, which is true. But young people are more interested in speculating in cryptos than in precious metals.
Wait, I want to expand on this, your theory that this may be a Fed creation from Jekyll Island. If it is a gimmick, what's it a gimmick for? Is it a distraction? What would be the end game?
The end game
Why would they
is
have
that
created
you have a cryptocurrency that is essentially backed by the U.S. government, and some kind of a electronic currency would have some practical applications. Like, at the present time, you want to send me money because you feel that I deserve some charity from you. You know, you have to go through the banking system and this and that. With the crypto system, you can just credit my account. And so it can simplify life. But the danger is, of course, that the cryptocurrency is abused and that it permits central banks to print even more money and without any visibility or transparency. So I think there are some dangers involved in cryptos. But as I said, I have physical precious metals. I think other commodities will go up more. I think food prices will start to rise again. And in some countries, they're going up strongly, like in India and in Nigeria and so forth. In the US, not yet, but it will come. Your croissant will cost a little bit more in future.
Dr. Faber, it's always a pleasure speaking with you.
Thank you very much.
Come back soon.
Equally.
And I hope you enjoy the rest of your summer.
Yes, thank you very much. Bye-bye.
And thank you all for watching. We hope you enjoyed this edition with Dr. Marc Faber. We'll have more great content coming your way. So be sure to stay tuned to the Daniela Cambone Show. That's it for me. We'll see you soon.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.